All right, hey everybody, I'm going to do a short video here where I walk through insurance. We're going to talk about the different types of insurance, what insurance is. I've got some terms in here that I pulled off the quiz. I want to make sure that I cover and then talk about defenses. So, and also I'll try to throw in some business stuff because this is business law and go from there. So first thing you should notice about the chapter is that insurance is a contract. We've already talked about contract law, so we know it's promises that are exchanged. Usually it's writing. It's a special kind of contract. In this case, it's called a contract of reimbursement. There's parties, there's the insurer, there's the insured, there's consideration, which is part of a contract, which is called premium, and the contract itself is called a policy. So, you know, a lot of insurance identifies what type of risk. Sometimes insurance companies even insure all risk, but usually the law interprets that as the type of risk that someone could anticipate, right? So during 9/11, you know, there was some question about whether all risk include terrorist attack against skyscrapers. Now I'm sure the insurance company is going to argue that it could not anticipated a global pandemic. So the type of risk or perils is often a question. Different types of insurance. I know this is a question or two that's on the quiz. There's whole life and insurance, whole life insurance and term insurance. What's the difference? Term insurance is just insurance with a death benefit, no savings component. Whole life has savings as well as insurance, although some would argue whole life isn't all that great of an investment tool. So you could potentially take a benefit out of the insurance before death, and then there's a benefit afterwards unless you take out all of the savings, and then it's usually for some set period of time versus term, which covers lifetime. So other types of insurance, to mention health insurance, disability insurance, homeowners, which is type of liability insurance. Another type of liability would be auto. You know, that could relate to a business and a fleet, or could be an individual. Other types of liability insurance, it could be an umbrella policy that covers lots of different types of liability. Workers' comp, there's a couple questions on workers' comp. So workers' comp is a type of really no-fault insurance. So rather than suing your employer, you recover for injury that took place on the job. Those are usually the two big ones. Is, you know, where did the injury occur and how did it occur? Usually an injury by a coworker is also covered. Intentional injuries to yourself, not so much. Accidental injury by yourself or your employer, yes. But again, that's state law, so that determines what's covered under workers' comp. That's a huge issue right now. You know, all these people working from home, what's covered under workers' comp? Where did the injury occur? Other types of business insurance, you know, just like personal, you could have automobile and property insurance. Malpractice is professional insurance for things like doctors, lawyers, accountants, and really requires those folks to exercise their skills at a higher level equivalent to others in their field. And if they're negligent in the practice of their profession, there's malpractice. Business interruption insurance is a huge thing right now. There's going to be lots of claims regarding that, potential defenses relating to whether the risk could have been anticipated or not, or whether, you know, I've seen even arguments that this is something beyond, this is an act of God, this is beyond anything that anybody could have controlled, and we're going to see how that pans out. Probably not the best word. Liability insurance on businesses. You know, it could be equipment, buildings, working with independent contractors, and will you have liability for their actions? Property insurance, they talk about the different types of coverage, and that's something that comes up quite often on liability policies is, was the loss something that was actually covered in the language of the contract? You have to have an insurable interest in somebody. You have to have, you will suffer some loss if something happens to it. So my wife could insure me, but you all couldn't insure me. I mean, I'm sure it'd be a big loss if something happened to me, but it's really not a direct loss. So if you insure things you don't have an insurable interest in, if you're paying money down on the risk that something could happen, then that's gambling, right? So you have to have an insurable interest. I know that is a term that is on the quiz. Subrogation is also on the quiz. So they give you this example of how your property is destroyed by a wrecking company because they went to the wrong place, and you could sue the wrecking company, but instead your insurer could pay you, and then they step into your shoes and they have a direct claim against the wrecking company. Assignment, so generally you're not going to be able to sign your contract. Like if somebody had an insurance policy on your life, you couldn't assign that to someone else's life, but if you have proceeds from something, then you could assign that. That's kind of a general thing through the courses. If we're just talking about money that we're going to get, we can assign that right to some third party. Intentional losses usually aren't covered. There's stuff in the chapter about whether that includes suicide, murder, those type of things. Co-insurance, generally know what that is, but I'm not going to ask you to make a calculation of that. Basically, the idea is that there might be more than one insurance policy, or there might be insurance for less than the value of the property, because the chances that there's going to be 100% loss is probably not real high. So in this example, the company insures the property for less than a total loss. It's insured at 80%. So the insured took out only a $500,000 policy. They only recover 100. So what they do is they say the damages are 160, multiply that by 5/8, and they come up with that by saying $500,000 of insurance divided by the requirement of 800,000 at 5/8. Multiply 5/8 by 160, you get 100. So must be true. That's what they say. All right. No fault trends. Yeah, I mean, there are some trends towards that. Michigan is a no fault state when it comes to auto insurance, although a lot of people argue it's not a very good system. Even Michigan has been trying to change it. Talked about insurable interest. This is kind of in the life insurance realm. Talked about subrogation. Changing beneficiaries. That's usually allowed during your lifetime. You could change and assign another beneficiary. And some rules around that. Talked about some exceptions or state laws related to suicide and murder. Let's see, defenses. So at the end of the chapter, I know that concealment is one that's on the quiz, and they're asking you to pick. I'm asking you to pick based on some facts which one of these it is. So representation, concealment, and warranties. Representation would be a statement that you would make, a fact which isn't accurate, and a concealment would be failing to disclose something which is material that you should have. So there's a fraudulent intent to conceal. And then the last one, warranties. Sometimes when insurance policy it's issued contingent upon certain things, like in this case, they mentioned an alarm system, incontestability. So there is a period of time that insurance company is given to raise issues, contest issues in the application for insurance. And if they don't bring it in that period of time, then the claim can no longer come up. So this prevents insurers from this bad faith argument that they just find out about something and wait until there's a claim and then say, you weren't honest or you failed to disclose something. So they have a limited period of time they're motivated to bring up that contestable issue. And I think that's really about it. This last case, mutual benefit, is about somebody who failed to disclose that they smoked, and their argument was, the beneficiary's argument was that the insurance company would have still issued the policy, just would have had different premiums. And the court said, too bad. It was within that period of time where the insurance company could raise the issue, and they did. And so as a result, there was no claim. So that is the terms. I think I got through all of them, and email me if you have any questions.